Many business owners get a rude shock whenever they get an additional tax assessment notice from KRA because they wonder, I've been filing my taxes religiously. I have paid all my taxes very well, but KRA is here and it thinks that I'm not an honest person. Really? Don't be surprised. It's because of a few mistakes that you do unknowingly, and I will discuss about the payroll mistakes. Number one is when you claim salary expenses at the end of the year when you are filing for income tax returns. When you are filing for income tax returns, you say these were my revenues and all these were my expenses, so that you get the profit that is taxable. Among those expenses is the salary expense. Good. And let's assume that you claim for 240,000 because you had one employee that you are paying 20,000 and you had this employee for the whole year, 240,000. So KRA will check whether on a monthly basis you have been filing pay-as-you-earn taxes for this employee. To make the matter worse, once the KRA checks, they realize that your PIN, your company PIN, is not registered for pay-as-you-earn. Makosa. It is an obligation and it is mandatory for every employer to be registered for pay-as-you-earn taxes. Failure to do that, there are penalties. Now, KRA has realized that you are not registered as an employer for pay-as-you-earn taxes. What does that mean? It means that you have not been filing monthly pay-as-you-earn returns. Now, what KRA will do first, it will disallow that pay-as-you-earn expense that you are deducting from your revenue so that you can come up with the amount of tax payable. And every disallowed expense increases your tax payable. Number two, KRA will backdate the registration date for pay-as-you-earn for your KRA PIN. So if you are in December and the first time that you had an employee was in January this year, KRA will register your PIN for pay-as-you-earn and backdate it to January. What that also means is that every other month that you are supposed to have been registered for pay-as-you-earn and you are not registered, KRA will be penalizing you 10,000 per month because you are also not filing for those taxes. So at the end of the year, that is 120,000. You can imagine if you are talking about many years. Number two is when you think that the only employees that you should be filing taxes for, that is pay-as-you-earn, are the ones that you pay more than 24,000 per month. Because again, here in Kenya, only employees who earn more than 24,000 per month are subject to pay some pay-as-you-earn taxes. The rest, below 24,000, they don't pay. However, don't confuse and think that you are not supposed to declare these employees when you are filing for your monthly pay-as-you-earn returns. Why? Because at the end of the year, and let me use the example that you used of an employee that you are paying 20,000 per month. In a year, that is 240,000. Now, if when you are preparing and filing for income tax returns at the end of the year, you want to claim this salary expense of 240,000, but all the monthly payroll returns, they are showing nothing of that sort. January, you did not file a pay-as-you-earn return because your employee, you are paying them less than 24,000. February, the same. March, the same. So KRA matches these 240,000 that you are claiming at the end of the year vis-a-vis your monthly returns. They don't match. KRA thinks that you are not honest and an additional tax assessment. So to avoid that, just ensure that you file for them. And number three is when you religiously file all your pay-as-you-earn returns. Your company is registered for pay-as-you-earn, you are filing for all employees, including the ones that you are paying below 24,000. Perfect. Congratulations. However, if you fail to remit that money to KRA by 9th of every month after filing, you are attracting penalties. And sooner than later, KRA will issue you with an additional tax assessment. So now what do you do as a business person? Number one, ensure that you register for pay as you earn obligation on your company PIN as long as you have an employee. And that employee could be you, because there's no company that does not require a natural person to do its operations. Number two, always ensure that this particular employee or employees, you file for them taxes on a timely basis, all of them, including the ones that you are paying below 24,000. It's very important. Number three, ensure that as soon as you file, remit all those taxes to KRA to avoid penalties, fines, and interest. Lastly, this is very important, work with a tax consultant. They will hold your hand and make you navigate in the right way the complex tax landscape that we have here in Kenya, so that you can concentrate on doing what you know best. And this is making your business thrive.